Welcome back to the program. You're still watching Nedbank Business Watch. Now for our market analysis segment, Treasury dealer at Nedbank, Zandiswa Dlamini, joins me now in studio to help us make sense of what is happening in markets, what's moving markets today. A very good afternoon to you, Zandiswa, and welcome to the program.
Thank you, Nasila. Good afternoon to you, and good afternoon to your viewers.
Right, let's get to it. We've got Trump recently is very optimistic about Ukraine regaining its territory, and then he also, rallied against the EU, saying that they need to stop purchasing oil from Russia or China. How do we see this playing out, in terms of commodities? How do we see it panning out anytime soon?
Thank you for that question. So, as you have rightfully said, Trump have changed his stance, especially against Russia, of which it is the first time he has been actually this optimistic with the war in Ukraine. So what we have noticed is that this makes the market a bit conscious, and because this will present new risks in the market, and we are very cautious of this blowing up and involving Europe. And as you have rightfully mentioned, that he's also putting a lot of pressure in Europe. We have seen that pressure also going to India and China, of which he was trying to persuade those countries to stop buying oil from Russia. So if this war continues, that will mean a lot of disruption in terms of oil supply. We'll also see prices of gold continue to increase. And this is specifically because gold is always seen as a safe haven for the markets, where we see investors putting their money on gold if there is a bit of uncertainty. And these comments also doesn't help considering the timelines. So last week we had seen the Fed cutting its interest rate cut, having its interest rate cut, even though South Africa and Swaziland did not. But in terms of the US, this means that investors were already in the move or in the transition to move away from the US in terms of their currency and moving to gold. So that have led to even higher prices in gold. But what we have also noticed is that the price of oil did not increase much. And this is not a true reflection of what's happening in the Middle East, because the tensions are still there. The Ukraine war is still going on, and these fights might still continue. But the reason the price of oil haven't increased is because there's a counter to it. So what we have seen is that there was a meeting for OPEC Plus, where they are now projecting that in October they are going to increase their oil supply in the market. So this is going to flood the market with oil, and hence it will negate the effects of the tensions in the Middle East. So we are still going to see if there are any other further developments, but normally what we would normally see is that the prices of oil will increase with the tensions, because it will mean disruptions in supply. But because of this high supply proposed by OPEC, the prices haven't moved much.
All right. Now, while we're waiting that for our conversation unite, the numbers would tell the story better. Yes. So momentarily, what are we looking at in terms of commodities? Where do we stand?
So in commodities, the prices of gold is currently up. We are currently at 3,000. It's 3,764. This is a bit higher compared to even last week. This is because the price have been continuing to rally up with the interest rate cuts in the US, and also the tensions continuing to persist. The price of crude oil is a little bit down to 68.77. And as I've just explained, this doesn't reflect what's happening in the Middle East or in Ukraine. The war is still going on. It's just that there's a projection of a massive increase in supply of oil. And there's also this move in Europe and also in China, which affects the price of oil, where the demand of oil have fallen. So the appetite for China to import oil have decreased, and Europe, because of its move to EV cars and moving away from oil, have led to their reduced demand for oil. So this is also affecting the price of oil. But with the continued tensions in Ukraine and the comments made by Donald Trump, which might prolong the war in Ukraine, we might start to see the price of oil increasing in the future.
Right. I'd like for us to move into U.S. markets, especially in tech. We have companies, tech giants, NVIDIA, OpenAI. They're investing billions, to help expand tech in the U.S. and also to possibly see the build of new data centers and growing chip supply in the U.S. Now, in terms of investment, when it comes to the U.S. space, rather investment in stocks in the U.S. in tech, is this positive? Would this probably be the time to buy more stocks tech in the U.S.?
Thank you for that question, actually. But what's happening, it might not. So tech companies have always trended higher. We have seen the rise of NVIDIA in the past 12 months, moving up to being the biggest company in the world. So tech companies have saturated the top 10 of the most valuable by market cap in the world. If you look at S&P 500, the formulation of their top 10, even it's heavily saturated with these big companies like NVIDIA and Microsoft.
Right.
So these investments are quite positive, and in the past 2 days, we have seen equities rally up because of the news that NVIDIA is investing $100 billion into OpenAI. This also filters through to other tech companies which might get proceeds or get something from that investment. So these have helped the markets in terms of an investment or a projection perspective in terms of how much money is going to be pumped into the industry. The AI industry have been rallying up probably for the past year, but this might still continue because we are seeing a lot of positivity in terms of the investor sentiment towards AI.
Right.
And if you look at the prices of S&P, it's currently down, but this is not because there's something bad happening. It's just that it rallied up a bit high in the past 2 days because of this news. So this is sort of a correction to the current levels. And we have also seen the FTSE, it's also down today, and the JSE All Share is also down. But I would like to highlight that these are not certainly bad news in the market, but it's a correction. The markets were very high up in the past 2 days, and this is sort of a correction. As you might remember, especially for the JSE All Share, in the past 2 months or so, we were talking about it breaking through 200,000. So it was trading at 99, 98,000. So it's currently at 105,000, which is quite high. And this is in terms of South Africa and the JSE All Share.
Right.
This is mostly coming from gold, copper, because the South African economy is very heavily invested in minerals and export of minerals. So we have seen the prices of gold go up. That benefits the rand and also the JSE All Share. We have seen copper going up. We've also seen other minerals like platinum also increasing. The other aspect of the correction is coming from the Fed Chair, Jerome Powell, who have indicated in his speech that he believes that the market, the equity market is highly valued currently. So as a response to that, obviously investors will pick on that and they'll start reducing their holdings. So as the price is now starting to reduce to show that it's highly valued currently.
In a minute, we've observed the rand performing very impressively, or there's been much improvement recently. Can we keep up? How long can we keep up this positive spike?
This positive spike is mostly still coming from last week's news in terms of the interest rate decisions from the Fed and also the SARB. Okay. So what happened is that the US have cut their interest rates while the South African Reserve Bank have held theirs constant. So that means with the reduced interest in the US, investors are now moving to emerging markets, emerging economies. So this benefits countries like South Africa and Malaysia, which are under the category of emerging markets. So investors are now buying a lot of equities in South Africa. They are also buying a lot of bonds that are denominated in rands. We've seen 41 billion coming in from foreign investment recently for the government bonds in SA, and that inflow of capital into the market have improved the currency quite significantly. And there's also the issue of a hawkish tone from the SARB, which means they are not going to be cutting as aggressive as the US. They are probably going to maintain their high interest for longer, and this continues to attract more investors to come to South Africa. We can move also to the euro and GBP. So in Europe, what we've seen is that they are experiencing quite sticky inflation, and as you know, Europe doesn't benefit from holding a lot of gold or these minerals that are currently highly valued, so they are more exposed to interest rate risk. So that's why their currency have suffered that. As you might remember from last week, it was at 20.56. So it reduced by almost 30 cents. And the rand against USD was at 35, 17.35. But it's currently at 30. But as of yesterday, it was trading at 17.22, which was quite low. And this does present a lot of opportunity across all three currencies. It presents a lot of opportunity for importers to start or to import their goods at these levels and make a lot of money.
All right. Fair enough. Thank you very much, Sandiswa, for your insights. That was Treasury Dealer at Nedbank, Sandiswa. I mean, helping us make sense of what's moving markets in today's trading day. Otherwise, this has been Nedbank Business Watch. Thank you very much for your time. Until the next edition, take care.
Make better money choices.